Matt Del Vecchio here. Thanks for joining me. Survey after survey has demonstrated that most Canadians would like to age at home as long as possible. In fact, according to a recent Ipsos poll, 95% of Canadian adults aged 45 and up that being able to age in place would allow them to maintain their independence, comfort, and dignity. However, it's a little easier said than done for many of us. And, the fact is the CLSC is failing us when it comes to home care. Families are relying on the CLSC, and some are actually hiring private home care agencies. As many of you know, I'm the owner of Premier Home Care, which is one of those agencies, and I'm getting more and more questions about reverse mortgages. Some people simply aren't ready to move into a senior's residence, and they're going the route of a reverse mortgage to help free up some equity in their home. Well, to tell us more about this, I have Dan Dilio, Regional Channel Manager, Quebec and Eastern Ontario, and for the Equitable Bank, that is, and I have Mark Barbieri, Residential Mortgage Broker with Plenty Prêt. Welcome, boys, to Life Unrehearsed.
Thanks, Matt.
Hey, Matt, thank you.
Well, thank you both for coming into studio here on a Sunday. Such an important topic. I'm hearing about it more and more. It makes a lot of sense for people. Mark, I'm going to start with you. So first of all, let's just back it up a little bit. What is a reverse mortgage?
Well, what's a reverse mortgage? Simply speaking, it's a product designed for those people who really absolutely want to remain in their homes, and it provides the money for them to do so. We all know the cost of living has skyrocketed in recent years. And the other thing that's changed is our investment horizon. We now need our investments to last a longer period of time because we're living longer. And the good news is with the increased housing values, we have more available equity in our homes. And for those reasons, reverse mortgages are now more popular than ever. The situation with homeowners is that what we see a lot right now with people of a certain age, they're house rich, but they're cash poor. And we've always been told, pay off your house, use it as a retirement fund. But as Dan often says to me, you can't take a brick to a restaurant to pay for your meal. So ultimately, a reverse mortgage is the ideal solution for someone that's looking for liquidity.
Yeah, and it makes a lot of sense. So, Dan, I'm going to bring you in here, Dan, from Equitable Bank. And so can you explain to our listeners how a reverse mortgage works?
Sure, Matt. So basically, a reverse mortgage looks at different criteria compared to a traditional mortgage. So it's a lot easier for people on restricted retirement income to qualify for money. So basically what we're looking at is how old you are, where you live, and the value of your home. So if you're 60 compared to 70, you're going to get a little bit less, or you'll get more when you're 70. If you're 70 in Montreal, you'll get more versus being 70 in Saint-Sauveur. Okay, so that gives you a little bit. What's nice about also how it works is given your restricted income on retirement, we don't obligate our clients to make payments. Okay, so what they can do is defer the payments to when they sell the home and allow their investment to pay for their retirement like they've always planned to do.
Interesting. It's you would think like a mortgage, you got to pay principal and interest, and this is the case. You're not even making payments on it. Listening to Life Unrehearsed, Matt Del Vecchio here, and I'm talking about the growing popularity of reverse mortgages to help age at home. And Dan, we're going to continue with you. So let's talk numbers here. How much can someone qualify for?
So the maximum you can qualify for on the product is 59% of the home value. Okay. Once again, that's a sliding scale. The younger you are, you'll get less of that 59%. But what's really nice about the qualification is you don't have to use all the money right away. And that's what how they can stretch their income and make it a long-term solution. So out of the money you are approved for, all you need to do is pay off any debt on the home. The balance of the money can be drawn progressively. You could get a fixed amount every month. Or if you're about to go down to Florida before next winter and you need a little influx of cash to do so, you can draw from it a bit like a line of credit.
So, just to take that a little step further, I'm going to use a house of $500,000. If you own a house, hopefully that's on the low end. There's houses worth a lot more than that. But if we choose $500,000, what you're saying is you could tap into about 59% of that. Is that correct?
Up to 59%.
But you don't, let's say, what's that, 300,000, just ballpark it. You don't have to take that 300,000. You just have to take whatever you need. Is that correct?
That's right. So if you, let's say in this example, you had a $100,000 mortgage and you're approved for the 300,000, you would absolutely have to take the 100,000 to pay off that mortgage, but at the same time be alleviated from those payments. Mm-hmm. The other 200,000 that would be left over, yes, you could take as you want, a monthly allowance, if we want to call it that, or you could take it on a needs basis, or really never use it and just have it set up for a rainy day. So the flexibility is what makes it really appealing to Canadians.
I like that. And I'm talking to Dan Dilio from Equitable Bank and Mark Barbieri, with mortgage broker with Planiprêt. Dan, just to finish up on the financial obligations, so we're crystal clear. Bring us through some numbers here. I now, that $500,000 house, I could qualify for around $300,000. I only want to use $100,000 of that. You're paying payments on a monthly basis, and what you're saying is it's really just interest you're paying, or you don't have to pay at all, is what you're saying.
So that's what I'm saying. You don't have to pay at all. So I think a better term would be you're being charged interest on the portion being used. What we're doing is adding that interest to the loan, and you can pay us at a later date. What's nice about that is your home's continuing to appreciate. Okay. Actually, it's a very robust market still in the greater Montreal area. So often the appreciation of the home is what really pays the interest. You're not really dipping into the money you've had before. The only financial obligations you do have is you must pay your city and school taxes, and you must keep the home in a general state. Example, if a tree fell through your roof, you would need to make those repairs. But that's why you have access to a little extra money. Also, what's nice about that, and the peace of mind, Matt, with that is, if you're in a couple and one of the people passes away, a bank at renewal could call in their financial product and say, hey, I lent to two people, not one person. However, with the reverse mortgage, the surviving member of the couple could continue with the mortgage seamlessly, worry about living out their pain, and not have to worry about the financial side of things. So it really gives them that flexibility.
And, what you're saying makes a lot of sense, and it comes back to the original theme. If you want to age at home a little longer and you need that extra cash, here's a wonderful way to do it. And no wonder reverse mortgages are getting very popular. Mark, we're going to wrap it up with you very, very quickly. What's the advantage of a reverse mortgage versus taking out a line of credit?
There are a few advantages, as a matter of fact. The qualification process, number one, is much simpler. We don't require revenue to qualify you. And the thing is, when you're retired, obviously you're making considerably less than when you were working. The borrowed amount is obviously going to be much higher than what you would qualify for a line of credit. So to give you that flexibility to live comfortably. And, of course, there are no monthly payments with a reverse mortgage. And the nice thing about it all, the rates are comparable with a line of credit and a reverse mortgage. So I think there's that fear out there that people think they're going to be paying that much higher. They're not.
Makes a lot of sense. All right, guys, thank you very much. You explained a little bit
Matt.
more. I'm sure there's
Appreciate
a
it.
lot more to learn, but very important financial tool that's only going to get increasingly popular. Mark, how can people get a hold of Mark Barbieri?
Well, they can email me at mbarbieri@planipred.com, or they can find me easily. Google me, Mark Barbieri Mortgages, and I'm always available.
That's great. All right. That's Mark Barbieri, residential mortgage broker with Planiprêt, and Dan Dilio, regional channel manager, Quebec and Eastern Ontario for Equitable Bank. Thanks, guys. Really appreciate it.